Good evening, guys. Thanks for your patience. Ken at Tortoise Capital. This is the nightly strategy podcast for July 28th, 2020. So I just came back from soccer practice, and I'm suffering right now because I got a rowing machine this week and assembled it. So naturally, I overdid it, and then had to hurry off to practice, and it was hot as could be. So I'm suffering right now. But it was gratifying. I had uh, my high school girls, a handful of them came to help me coach the U10s. We were coaching a boys and girls team, and so the high school girls volunteered to show up to get some extra touches in and then to help mentor the little guys. One of my players showed me her homework. So I've been on this little investigation in true storytelling, and the one of the topics that keeps coming up is this relationship between a coach and a player, in which I frame as a reciprocal, co-creative relationship that each one has the opportunity to make the other one better while making themselves better. So the homework assignment that I gave the girls was to list the qualities of a coach that they would like to have. Like if they wanted to be coached by somebody, what kind of qualities would that coach have from a player's perspective? And then I asked them to say, I asked them that the reason I asked them to do that was because I wanted them to help me come coach the little guys. So I needed to hear what they thought, the qualities of good coach would be. What's the best thing for a player? And then I asked them, I said, now, when you're in that role as a coach of these little guys, what kind of player are you hoping to have on your team? What kind of player do you want to be the coach of? So they put together 5 or 6 different qualities of that. Then I said, all right, now I want you to evaluate me on the basis of what you are looking for in a coach so that you can give me my report card on how I'm doing with you so far. And then I want you to give yourself a report card on your own performance as a player based on what you wanted to see as a player if you were a coach. So are you being the kind of player that you would want to have if you were a coach? So there's some metacognition going on there in the minds of these high school girls. And so a couple of them brought their homework tonight, and it was really well done. So I'm thinking about turning that into a creative and critical thinking writing assignment for our opening week of foundations course in our military college, because we're getting ready to start that up in a few weeks. It may be that we do all of that virtually, because at age 63, I'm not so sure that they have enough money to make me want to come into the classroom, into that giant petri dish that is the classroom. I know that we'll be taking precautions and all that, but I'm not sure that's a risk I need to take or want to take. But we'll see. I got some weeks before I got to make that decision. But in the meantime, I'm thinking about making this the same kind of an assignment for the military officers, basically in the same terms. That while they're here as a student, they're really in the same role as a player on a team. And that in my role as a teacher, I'm in the role of a coach. So I'm going to have them explore what it means to be a player and a coach, a teacher and a student from both sides of that, and then turn that critical thinking and creative thinking exercise into a annual educational goals contract with the idea that this models the kind of behavior that they can use once they get back to a unit when they have subordinate leaders and they're in that position of authority and have the responsibility to be the developers of staff. So that's the basis of me asking Ken Hum here tonight that things are going really well on the individual case studies he's posting, and now I'm looking forward to seeing, if he wants to, his monthly performance. And I've given him a minimum amount of guidance. So I'm really interested to see, in his usual meticulous way, what he'll come up with as a personal evaluation report, because that will help shape the kinds of feedback that I can give him based on the feedback that he offers me. So I'm going to ask him to think carefully about that, both from the coaching side and as the trader side. What is it? If he was a coach of a trader, what would you want that trader to show you? And then, as a trader who wants a coach, what kind of a coach is he looking for? And then, uh, what kind of feedback is he going to give to me in order that I can be the kind of coach that he's looking for? And then, in that co-creative dialogue, then we will shape an individual coaching session as part of his coaching program for this year. So, although I have checklists and believe in checklists and structure, I also believe that it's essential to stay focused on the important purposes and requirements from the end user's perspective, whether you're a player or a trader or a coach or a military officer. All these things linked together, and there's a certain synergy in the way that I'm now beginning to approach this whole teaching, student, coach, player, professor, officer relationship in the world. So, Ken, that's your challenge, and fire when ready. So, let's see what we have today. As we're getting started here, I was listening in on some of the news, and boy, there is some white water ahead. I'll tell you what. 100 days to the votes. Biden's choice for vice president is looming larger, which is really a selection for who the president's going to be, a person who's unvetted by any democratic process, who will be a creature of the Democratic campaign, and who, for all practical purposes, will be the real president, doing the bidding of the behind the scenes puppet masters, propping up that cadaver of the candidate Biden. And then on the other side of the equation, you have the vectorless energy that is Trump, in full desperation mode, capable of anything, denying funding to the down ticket Republicans, almost guaranteeing a Senate and House sweep for the Democrats. Even if Biden doesn't win, the House and the Senate are almost a lock to go over to the Democrats. And also that the Trump campaign guys can leave the administration and leave the White House with more money than they started. So it's really just a venture capitalist ploy on behalf of the Trump crime family. Absolutely despicable. So that's where we are. And now they're fighting over the nature of the economic stimulus for the workers. Are finally going to get to that. And now they're arguing about who can pay them less. At the same time, the large cap corporations are fully taken care of. Now they're fighting over nickels and dimes, and still haven't solved the problem of how to provide low cost, efficient healthcare in the middle of a pandemic. We still have healthcare that's geared towards people's jobs, which they're losing faster than ever. And the whole unemployment insurance approach to delivering money to the people guarantees that more people are going to go uninsured, and the economy won't grow and will be deeper in debt. So they're like 3 for 3 on being stupid. Quite a remarkable achievement. So as I look at the the opportunities in this market coming up. That's the frame of reference that is front and center uh, to my eyes. That's the lens I'm looking through before I go into the framing. So I have a certain directional bias, and now the purpose of framing is going to be to eliminate the directional bias so that I can see where the decision points and the critical states are going up or going down, so that I can follow price and not be surprised by price whichever direction it goes, even if that's sideways. So that's the frame of reference that I have as I begin the tactical market assessment, starting with the daily. So I'm noticing, that the 10-day low, the 10-day high, came back to a 10-day low and is now locked in. There's the RL10, basically flat right in the middle of the 10-day trading range. And here's where the price ended up falling to today. So we're in the lower half of that 10-day range. And we basically had the same size of a move today as we had yesterday. Bring this in a little, whoops. Zoom this in a little bit bigger just so we can see. See these like anchor points or turning points, this 10-day low to the 10-day high. So this little oscillation is a bit troubling. And so this is our price level. So we're in the bottom half of the bottom half, or like at the midpoint of the bottom half. So we're like at the 25-yard line. And another day down, if it's the same size as today. So if we got to move down here, then that would challenge this 10-day low, this double 10-day low. And then it's another move of that magnitude down to the Bollinger Band mean. So the downside would be a violation of the low of the day. So the low of the day at 320.81. The next one down would be the PSAR at 319.80. The 10-day low, 318.95. So really call that 319. So 319 is really the line in the sand. If that breaks, then it's pretty fast to get down to 315, which is another 1.5% move. So that's about 1.5 ATR to get down to that Bollinger Band mean. And then there's not much resistance until you get down to, Z1. I suppose this cluster in here, that really is, I'm seeing that as the Bollinger Band mean. That's all integrated here into the Bollinger Band mean. Maybe there's a support level here, halfway in between. Maybe that needs to be a support level, like at Z minus 0.5. You could, I wouldn't quibble with you if you wanted to say that, but really all of that is contained in between Z0 and Z minus 1. So this whole region here is the southern half of statistical normal between Z plus 1, 0, and minus 1. So fully 1/3 of the price action is inside here. So if the Bollinger Band mean doesn't hold, then this acts as a support region, and then the final test would be here at the Z minus 1. That's how we interpret that, right? Which would be, 308.43. So this whole region from here, there's no one particular price level that's key. It's really just this entire region has to be support. Otherwise, if Z1 doesn't hold, then it's lookout below. It's back to the statistical low of the dragon belly at 306, and then long-term fair value at 303, and then Z minus 2, which is where disaster would set in. And that's the way down here at the 30-day low at basically 299-ish. And then Z3 is about 297. It's just off the chart, just maybe 296. So, there's a lot of price support levels on that way down, but really this 10-day low really needs to hold. If this 10-day low doesn't hold, then we get back to this price level here pretty quick, because this whole sideways chop was replaced and followed by this strong move up. And if that's the base price on this strong move up, and it's already had one test, and on that test it only got halfway back up the stack before it started to fail today. Well, if this gets tested and breaks, then it's more than 2 weeks ago till we were back here, and then it tests the Bollinger Band mean, and then if that fails, down to here pretty fast. So that's the story to the downside. That still, to me, is the least surprising move. If that happens, what would we do? I'd be looking for things that are already weak, or I'd be looking for things that were strongly defensive in nature, like wheat and precious metals. Certainly comes to mind. Treasuries, we're going to see in a minute, have been pushing steadily northward, and they went over 170 today in TLT. So that position's looking pretty good. The other thing that this real potential, the downside, points to is the need to lock in whatever gains that you have in whatever sectors or symbols that were earned on the way up. Those need to be protected. And I'm going to show you 2 examples of that right now. One of them is in clean energy, PBW. Find him. All right, so PBW has been in our core portfolio for quite a while. We added to it here. So the original PBW, we got into it back in this area when it went from spring into summer, and it was outperforming in here. And then it gave us a peak, support, collapsed into a sideways quiet channel, And then we frame that as either a failure back to here, or it might resume and move higher. Well, it moved higher. And we built an additional position in there. So now this thing is sitting up here right on the PSAR and has come back to Z1 after what I would consider, one leg, 2 legs up. And that's really been an outperformer, especially when you look back to where the previous high was before the big sell-off. So this is actually, all of this entire region of gain. This entire region of gain here is higher than that previous level where it collapsed. So if my thought is, hey, I want to, if I'm looking at the potential of a broader sell-off, a broader sell-off in this market that might pull PBW with it, well then I now have to think not only what can I do to make money on the downside, and what defensive sectors might be doing well, but I also got to take a look at some of my other positions like this that have outsized gains that might be subject for an increase in selling pressure because other people want to lock in profits. So I got to think about locking in my profits. So PBW is one of those for sure. Wheat and precious metals, WPM, on the long term. This one also got into the portfolio in this region here, where there was a sideways quiet channel that resolved to the upside. Then it broke out again here. And now wheat and precious metals is just amazing. It's starting to get a lot of attention, which I'm not really happy about. It's up like 70% for the year. And so this is a case where, unlike PBW, wheat and precious metals is postured to also be a defensive play if the market were to start to collapse here. Why? Because it represents a play on gold, silver, palladium. And I just took a look at an analyst report from Zacks. These guys are in brilliant shape. Got a lot of money, got a lot of low-cost, high-performing metals in many different categories for precious metals. A $2 billion line of credit, got $20 billion market cap. And so this is not a company that has cashed it all in to make one final run. No, these are guys that have really been managing their business extremely well and are only likely to get stronger if the market were to tank. So this is actually the case where if the market doesn't tank, does this become something that you got to preserve? That's a good problem to have. But if the market does tank, then this is one where we got to look to be adding. So I got to be looking at this in both directions, not only preserving profits, but also being able to add to and exploit in the case of market meltdown. So that's a good problem to have. Now, Twitter has been one that we identified back here around at 28 and 30 when we got our positions in here at 31. And this position down here at 29 and 30. And then it resolved to the upside here when this breakout occurred, and took partial profits in this move back here. But now I got to take a look at this and say, now, is this one where I've got to, I have to at least be ready to get to zero now that the PSAR is coming up here. And so I got to be thinking about like a sniper exit here, or just let the PSAR take care of it. The PSAR will take care of these entries, but on the entry over in here, which has already come back to flat, I really got to be watching it. However, if the market doesn't fail and the tech leaders do well, then I got to look at reinforcing this because there has been a surge recently up to 40, and that's another, that's about a 10% move back up to Z3. So I've got to preserve Twitter in the case of broad market meltdown, because that's going to be one of the tech leaders that goes to testify in Congress tomorrow. So the next day or so could be volatile for them, and then the other large cap, but more so Twitter, because he doesn't have the same market cap as those other guys, and therefore is a little more vulnerable to the cherry pickers on the hill who are looking to tap into these guys as a source of revenue. So Twitter's there now. Virgin Galactic is an interesting one, SPCE. So this is the case where the breakout from the sideways quiet channel has occurred, and now there's a nice consolidation going in here. Now he's got an earnings report on Monday, and they just hired a guy whose specialty is taking companies who are in this prototype stage to the next level. And now that it looks like they've secured long-term funding, if this breaks out, you say, well, where's the next level up? Well, it's really all the way up to the hump of the dragon over here. So this is a case where to the upside, you could see 33 or 34. And then as a second leg, you could see that there were still people that are owning this thing from 43. So there's two broad boxes of support, if you will. I could almost argue there's three. If you go to the top of the RL10, that's probably a better way to draw this as three tranches of potential gains. So I would say an immediate, target up here around 33, 34, and then probably 38, and then the far side of that at 42, if who knows. So this looks to me like the future of space travel is their argument. But then if this breaks now below, let's call it 23, it at least gets back down to 18, and if that fails, it's down to basically to Z1. So that's a speculative play. It could go in any direction, as you can see from the previous excursions. This is that second wave, and this is an argument for why we care about those Z3 pinches and the size of those pinch boxes, and why the breakouts from those become really important checkpoints. So now if this price collapses from the current price box, so if this price in here collapses, bang, this is the next rock solid support level, and that's actually tradable right there. You might want to wait till it breaks the PSAR or the skin of the dragon or the Z1. To me, I'm ready to trade this thing short on a break of 23, based on their as people are. If people were nervous about their earnings report and who are holding gains on this run up to 29, then that could induce some panic selling. But true believers are going to be locked in, and I got to believe that no matter what the earnings report is, this long consolidation level here has got to be able to hold. So I see that as a tactical trade to here. And then if it got back in here, I'd be looking to buy and load up. My wife doesn't know it, but she's in her retirement account, she's a proud owner of some Virgin Galactic space flight. I'm trusting you with that information. Don't let her know that. So I say that last little excursion then, the SPCE, the Twitter, Simon Property, Clean Energy, Wheat and Precious Metals, those are 5 different symbols that each one has its own kind of strategy and its own context inside the larger possibilities of big market sell-off. I want to shift out even further now, or do it? No, I want to get back to this. Let's get back to the daily. So we just made the argument for why the downside is a real thing, and it puts this entire move up the stack at risk, and ultimately coming down to test in this 300, that psychological level of 300, which triggered this entire move. So this, a high and a lower high, and then double testing, you could almost see getting short tomorrow at the low of the day as an opportunity to front run this test of the 10-day low, in which case you could put a second position on for the test down to the Bollinger Band mean, and then the third position on a break of the Bollinger Band mean here. So what's the upside? I don't see it as a runaway upside in the same way that I see a runaway downside. But the argument is there that if it can break above the high of the day, which is also the hump of this dragon, you can see the dragon hump rolling over in the same way that the baby dragon is rolled over, in the same way that the RL10 is rolled over, in the same way that the RL90 has peaked. And now, so this is why I would consider this to be such an important potential turning point. I mean, I look at this move like this. Like here is a move all the way back to the. So this is the 30-day low, and this is where that RL90 crossed. The the 30-day low. This is where the RL90 crossed the Bollinger Band mean. And now you can see that the Bollinger Band mean has moved this far. Whoop, sorry. The Bollinger Band mean has moved this far during that time. And the RL90 has moved that far during this time. But now the RL90 has rolled over and gotten into that 12 o'clock position. So now you say, well, if this thing does collapse all the way back, it could take that long for it to go. But we also know that collapses can happen a lot faster than the grinding upward moves. So it might only take half that time to make that move. And it's actually already come down a considerable distance from that peak. So this thing could happen this fast, which is like in 5 days, it could get back this far. So with that RL90 rolling over, that's like the RL30 on the weekly chart. So the RL90 now is giving us some insight onto what that next higher time frame is looking at. And that is, hey, this is a really good move, has moved all the way back to 330. It's already been up and tested Z2, that Z2 level, and now has pulled back one step, starting a second step. So if this collapses, this thing could go fast. So that RL90 is now saying, you've had a really good run. Now make sure that you preserve. Here's like a 1/3. So if you take a look at this move here, the move from here to the 10-day low is 1/3, 2/3, 3/3, roughly, all the way back to where the RL90 crossed the Bollinger Band mean. And now if you notice, now as we follow up some of our other indicators, the RL30 is still slightly sloping up, but you can see how it's starting to flatten out a little bit. So that's starting to stall. The dragon is still pointing up, but the RL10 is flat, and we are very close to testing the PSAR. So for all those reasons, this feels like a really important turning point. The question is being put, is this a turning point, or are you going to find support here and turn this into a low and then a higher low? So let's look at the upside now. So if we took this as a very strong support level, then, and if this low of the day holds here, then we actually have a high. Now this feels like finds a higher low, and then it could start marching back up the mark. So where would it have to go from the price here? It'd have to get through the bottom of the dragon bottom skin, has to get above the RL10 price, which is here, has to break through the high of the day at the top skin of the dragon at 323.8, call 329. Then this is the peak RL 270 fair value. So, genuinely, if we get this kind of a move through the high of the day, what's the last time we had a big upward moving day? It looked like this, that size of a move. So if we got that kind of a move off a price, then this would feel like it's getting very close to that 10-day high again. So all it takes is another strong move, and you get this. And then if it breaks through the RL10, then it's free and clear. Now, I think that's a lower probability event, and I think it would probably take 2 days to do that. I'm trying to imagine a runaway upside move, given that the 5 tech leaders are going to Congress and are going to get shredded for the cameras. What's the upside of that? None. That's pure damage control. But imagine something is said that gets interpreted that way, or Trump says something goofy, and you get 2 days of gains. Now we're right back to testing the 30-day high, and then this would look, in retrospect, this would look like an important a higher low that actually worked. And we're still on the right side of the PSAR, and the slope of the dragon is up, and the RL30 extension is up. So there is some grinding buying pressure in here. And so I can see how that could happen. Now, if that happens, what would be the candidates for targets for that? Well, I would say the sectors and the key relative strength leaders that were so strong on this entire move up, everything that was strong on this way up should be the ones that would lead us higher from here. The tech leaders could do it. There's no other sector that's been really strong, except this is where something like maybe PBW has more legs in it. Maybe Wheaton has more legs in it because even if it gets this high and gets up to that RL90 peak at 331 and stuff, it's still 95 days to the election. And so we're going to see more and more tests like this. And that's why I think this is more of a grinding move. And then this is one to the upside. I'm playing shorter term, and bird in the hand is worth two in the bush. And my usual trading suspects, things like Brazil and Mexico and Virgin Galactic and SPG and Devon Energy, I'm looking to make bank on one-day runs on those. So we're going to take a look at we're going to do a weekly chart speed run after we get through the daily report, just to see if there are any other candidates that jump out at us. Okay. So anyway, what I want to say is this feels like we're at a really key turning point in this tightly constructed 10-day range. Because remember, this 10-day range is only 2.5 percentage points wide. From the 10-day low to the 10-day high is only 2.54%. And we are only from the 10-day high down to the current price, we're only 1.86% off the high. So we've got this compression, this price compression happening, and this tension is going to get resolved in one direction or the other. The easier one to see, the runaway move, is this downside, but there is a grinding upside scenario that's possible. If there is an upside scenario, I think the grinding one is much more likely than some kind of mad rush to the upside. So I think it's more of a grinding move. The mad rush to the upside would be the least surprising move. And I guess we'd know it if we saw it. And so that's why I've got to keep I'll be just watching the sectors and the broad market itself to capture that. Okay. So that's what I want to say about where we are. What worked today? Let me know if you found that to be helpful in terms of setting the stage for a non-biased evaluation of the directional plays. Okay, so let's see. The SPY was down 0.63% today. So let's look at what suffered today. So there's DIA at -7.6, IWM at -1. So it was the large caps held better, and then the speculative ones had less of a grip. Among the symbols the sectors to the downside, I should say, consumer discretionary down 1%, tech down 1.2%, oil exploration down 1.4%, energy down 1.7%, basic materials got slaughtered today, down 2.2%, clean energy PBW down 3%. So now if we look at the companies, the things that got slaughtered was Virgin Galactic, and I think that's guys that were locking in their gains prior to their earnings announcement. They were off 4% already. So if you were looking to lock in gains, you probably did it today. And it's pulled back to an area where, as I just showed, I think there's some possibilities. The entire material sector has just been assassinated, right? U.S. Steel is back down to 7.5. It's off 7% today. Remember, that was trading up darn near 12. So that's almost a 40% sell-off down to 7.5, which now makes it interesting again. Cliff down 4% to 5.6. That was up around 11. There's Nucor Steel and Alcoa, and the whole material sector just got undercut and cleaned out. So that now makes me interested in them for that next possible cycle up. In the tech sector, so TQs, which is the old school NASDAQ 100 guys, that's 3.76. And then the broad tech sector TECL, the triple leverage, is down 3. There's your key leaders all getting ready to get beat up tomorrow. Facebook, Apple, Amazon, Google, probably Microsoft in there somewhere too. So the tech titans just got smashed today in anticipation of tomorrow's ass whooping. I shouldn't say that. Bad language. Home Depot pulling back a little bit to give us a possible entry. I like that. Intel is still holding at 49. That's like a 9-to-1 on this auto framer. Once we get to that, remember to take a look at that. All right, to the upside, what was better? Well, Brazil didn't lose as much, minus 0.6. Finance was a little better. Mexico a little better. Healthcare a little better. The only things in the green from my stack: Walmart, Treasuries crested 170. Simon Property Group was a very good trade today, 3.5. Triple in or double inverse energy, and then Win up 4%. So mostly downside, and a whiff of profit preservations in that whole turning point that I just described. The longer term pressure is from the election, and then some of the technical pieces of things just rolling over, and then still some key earnings getting ready to come in this week. Plus increased uncertainty in politics. So all of those things point to me to more of a sharp sell-offs, or a grinding upside is the next possibility. Okay. So now I want to come back out a little bit and look at this is now the S&P on a weekly. So you can feel, or at least I can feel. I feel how this is running out of steam. It had its little test up here at Z1, has settled back in, and it's in the upper half, of the of that trading range. Suppose I could make that green. So there's a certain comfort level, and price profits to be preserved. That whole 315, 316 now feels, yeah. The downside would pick up in here. So that's kind of how I see that. That's the next layer of upside, halfway up to Z2. And then I suppose, if you insisted, we would do that. So this feels more like the market playing a waiting game. As we think about the election coming. We're talking. This is October, so September, October. So right about here, this vertical blue line is where that darn, the mad minute of the election. That's just how much time there is for positioning and tactical trading. Everything beyond that vertical blue line, that's maximum uncertainty for the election. So it just feels like to me, if I just took half of that time frame, I just feel like, man, we gotta, once it gets past, I'm going to say about 1 October even, that's really pure tactical play after that and positioning in that last month. So this is the last period of time here where I think the swing trades in the normal course of business for strategy making. And again, I have no interest in my core position of doing anything other than treasuries and cash until November. And then the swing trades by exception, and then really mostly day trading from about certainly from the black line forward. This is going to be only day trading. And then I see swing trading by exception in this August September timeframe. So I think there could be some swing trades in here. But then when we get into here, this is going to be all day trading. So that's how I'm seeing that. This is treasuries on a weekly. I'm going to start looking at this one more. And this is that nice move to the upside. Man, a crash. So anyway, I see this testing that 172, and then up we're going to go. If it gets above this 172, this thing's free and clear. Meanwhile, the SPGs or the fortunately I had this thing already geared up. All right, I'm going to take a quick look at so this was SPG today. Hey Van, don't tell me that this is worth 10 times what I'm charging you, or I'm going to have to raise my prices. Don't tempt me, man. Let's see now. Get some brushes here. So on this first trade, I took a look at this is SPG on minute charts. So I took a look at that as my minimum manageable risk box here. And I noticed this held support at the previous Z3. It gave me like a 1, 2, 3 kind of an entry. And then that whole box move off the bottom, and it broke out above the high of the close. So long here with my typical stop at the PSAR. I gave back too much. This happened pretty fast. So I made a fraction in here. I was slow to get short here. I waited for it to break below this PSAR. So that's really, I would call that a collapsing dragon right here. This would have been the stop and reverse play. There would have been some gains, but I waited for the collapsing dragon. I gave back like 5 bars and then took a fractional loss here. So this nets out to about nothing, because the little that I made here is offset by the little that I lost right there. Then I'm happy to notice as we get the RL10 rolls over, and then we get that higher low here. Now we have a standard supported spring crossing with the PSAR and the Wu Wei exit. Pick up the Bollinger Band mean and cash that green box versus that little give back of the blue box. We get a lower low. We get a Z3 pinch. The rest of the market is down. Simon Property Group was one of 4 things on my stack of 40 that was up. So this was a top 10%er. So I'm not really interested in the downside of this thing. not interested in the downside, only the upside. So get a supported spring crossing. I treat that as the winter. We get the spring PSAR flip. In this case, it breaks above the Z3. It breaks above this Z3. So I add the second position. At the same time, I am doing the Wu Wei stop, but because I've got two positions in now, instead of following with the Bollinger Band mean, I'm basically using the PSAR dots because I have two positions on. It gives me a Z3 excursion. It pulls back. I take half on the sniper, take the other, and then on that one, I just draw that line across. And just as the Bollinger Band mean catches up, it comes and hits, and so then I'm all out. So this one paid pretty well, or two pluses on that one. This one played pretty well. So Simon Property Group was pretty good for me today on a day when just about everything in my stack was going down. Yeah, so I did want to say more about that whole treasuries play. So this is weekly on the treasuries. I'm going to start adding that one sort of as because I think this is the alternative strategically to the S&P. Because right now the big question in the world is, where are you going to put your money? You can't put it in bonds because interest rates are less than zero, and you sort of got the U.S. Pushing the, you compare it to Europe and the Euro-Asia mix. Japan's not going to be a source of large gains. So where are you going to put that in the tech leaders, or in treasuries? So it still looks to me like the U.S. is the location of choice. There's only so much that you can see, kind of like in gold and silver, which for us we're playing with wheat and precious metals. So you still sort of have that. And there's sort of DBC as that mix between base metals, precious metals, um, oil, and agriculture, right? So that's a blended commodity ETF. And you just say, well, commodity's been beaten down so much. In fact, if you look at DBC, you see that after their sell-off, they've only come halfway back up the stack. So the price of commodities still has a big move to get back to the previous, whereas the S&P is already close to its near high. So commodities gives you an area of potential. And most of that gap is because of a loss in the energy sector. So those are certainly some places that you could go, but those are all kind of tactical. So if you're looking for a strategic place, where could you go? Well, treasuries is sort of a place. And what I laugh about this, one of my favorite quotes is that treasuries are the risk-free rate of return. So when you read academic journals and they want to compare different investment strategies, they always say, well, we need to show the alternative. What's the control group? And they say, well, you got to factor in the risk-free rate of return, and then they use long-term treasuries, TLT. But if we just look at this, you say, what in the world? This is a week. Look at that. What are those things? And then the size of this move. Wow. And what is this? Does that really look like the risk-free rate of return? So when you're thinking about treasuries, there are guys that are playing the tactical trade when you have these amazing anomalies. Like, how would you have liked to have bought treasuries around 144? Or even on this kind of an anomaly move? How would you like to be holding treasuries from 154? This is the area where I switched to them when I shifted the core position away, and based on the RL10 crossing the baby dragon, because I looked at the bottom here and I said, oh, that's fine. And now what we've got is this move that has, I want you to just notice the PSAR here has now flipped to there. So now we can think of this as a support region or a trading region in here. And now we've got 2 weeks worth. This is a week plus 2 days of it starting to break out above a key price level of 170. So if it can get above 172, the last time it was, that's a $10 move to 180, and that's about 6% on that move from there to here. And that's after even factoring in then that little bump, there's still a 6% chunk there, which is 2% gains. So even if you said that was a support level and you bought a breakout, you could see 1, 2, 3. So treasuries on a weekly, that's sort of the argument that if we get that market meltdown in the equities and tech gets slaughtered, but people are still looking for the U.S., the defensive play is treasuries, and maybe that's still more attractive than Japan or EFA or even commodities, because I only think this is already richly valued. But with gold approaching a key price level of 2,000, that could be a psychological boost that keeps going. So I just like wheat and precious metals in that area because they're not just gold, and they have a pretty good business model. And then I'm really looking at DBC as an opportunity in there too. So the treasuries on a weekly basis I find interesting, and I'm going to start adding that to the reports. But this is kind of a strategic consideration here that comes back to that first question, which is where in the world are you going to put your money? You can't put it in China. The whole world is decoupling from those nitwits. That's those people. So where else are you going to go? So that to me is sort of the operational argument for treasuries. And it's really approaching this key price level here. It's come down and zoomed up. So if it can break out from here, 180 feels like the next one. And if it gets through 180, there we go.